For that, we're joined by John Addis. He's the founder and CIO at FourWorld Capital Management. John, good to see you. Thanks for joining us.
Hi, Michelle. Good to see you again.
So, John, Yahoo saying it earned 9 cents a share today in its second quarter, a miss on already weak expectations. Wall Street had expected Yahoo to earn 10 cents a share, down from 16 cents a year ago. Revenue did beat estimates. What's your reaction?
We overall were pleased with the report. Revenue ex-TAC was a slight beat. As you mentioned, a very small miss on adjusted EPS, but their EBITDA number was a beat as well. So I think, you know, what we and I think most market participants were looking for in this report was, is there a reason that the sale is going to go through at a lower price than what people have been talking about? And I think the company did a pretty good job in alleviating those concerns.
Well, let's talk about the sale, because on the call, Mayer said that Yahoo is, quote, deep into the process of evaluating proposals. So is it a given now that its days as a public company are coming to an end soon, that a sale is in fact imminent?
I don't see any way that a company that announced they were putting themselves up for sale, 6 or 7 months ago, that's gone through 4 rounds of bidding, that's put their employees, their shareholder base through everything that they've gone through, that now has an activist controlling 4 seats on the board. I don't see any way that they don't go ahead with the sale at this point.
All right, so let's talk about the potential buyers. There was Verizon making a bid, talk of AT&T. Who do you think would be the best fit? Who's most likely to go through with this?
Well, I think Verizon, and I think it's just very simply because Verizon's got the most synergies with Yahoo, given their already existing acquisition of AOL. So I think they probably have the most economic value added. The one I'm very interested in as well is AT&T. I think AT&T originally said they weren't interested. Then they submitted a bid through YP, which is a 50% joint venture. Then YP dropped out and AT&T reemerged. So I think they're the one that I'm really keeping an eye on, because I think that at the end of the day that if they let Yahoo go, they're basically ceding the ad tech space to Verizon. So I think you've got some real big strategics that are focused and competing on this.
Well, they say that the sum of the parts is greater than the whole. What are some of the good parts here? Yahoo Finance, it does have its patents and the media business. How much of the appeal, though, is about its stake in Alibaba?
I think, Marissa alluded to this in the call today. I think what's really driving the sale process at this point is the desire to separate Alibaba from the core business. The company's market cap at the end of trading today was about $34 billion. On a pre-tax basis, their stake in Alibaba alone is worth $30 billion. So I think that's really the elephant in the room and the underappreciated asset on their balance sheet.
And we've seen the stock rise on speculation of the sale. In total, how much do you think Yahoo could be bought for?
I think your numbers are good. I think you're looking at something in the $4 to $5 billion range for the core business, excluding real estate, excluding IP, and excluding their stake in Yahoo Japan. And I think you'll see something in the 5 to 7 range when you put all those pieces together.
Well, John, the earnings showed that the Tumblr purchase, big mistake. Yahoo is now writing down the value of its Tumblr acquisition by $482 million, so that in total, Yahoo has now written down more than half of Tumblr's value since buying it for $1.1 billion. Now, this was Mayer's biggest acquisition. So does this just highlight how Mayer has mismanaged the company, or were expectations of her turning it around just too high to begin with?
Yeah, it's actually something we think a lot about. I think when Marissa was brought in, the management, the board of Yahoo kind of bought into the idea of returning Yahoo to its old level of prominence in the valley. And I think you can lay blame at Marissa's feet. You can lay blame at a lot of their feet as well. I think by that point, Google and Facebook had just become so well established that return to growth and return to greatness strategy was just flawed, and it never really had a chance.
So you're saying the odds were stacked against her from the beginning, given Yahoo's popularity had already been on the decline?
I think that's really, in hindsight, I think that's really where we are.
Well, would a deal then end her tenure as CEO of any part of this conglomerate that would be split up? What's next for her?
I think the investor universe would be stunned if she stayed on the company in any sort of an operating role after this deal was done. I think you have Tim Armstrong at Google, excuse me, at Verizon that makes a ton of sense in terms of running the combined companies. I think you've got, Ross Levinson's now dropped out, but I think you've got a lot of great operators that are looming around that are probably going to be more suitable to running the entity on a going forward basis.
All right, thanks so much. John Addis, founder and CIO at FourWorld Capital Management. Thanks, good to see you.